Hey, everybody, and welcome back to another edition of the What's Going On in Banking podcast. I'm Ron Shevlin, Chief Research Officer at Cornerstone Advisors, and here, of course, with my co-host, the Director of Client Development here at Cornerstone, Stacey Bryant. Stacey, how are you doing today?
I am great. I'm much more healthier now. I think I told you last week I got the bug. So it's fall here in the Northeast, and I'm happy to be able to be bug free and back to it. I've been on the road already. I went to New York Bankers Association earlier this week, and they needed someone to speak about AI and what does that look like when they think about the omni-channel experience and being human at the heart of community banking. So that was fun, seeing a continuous trend of folks and community banks needing to know kind of like the one-on-one on how to leverage AI. What are folks doing? And then kind of did the same thing for small credit unions in the Maryland, DC area. So that's been my week after the bug. How you doing? What's up with you?
I can't complain other than the fact that I travel all the time these days, and October looks like it's going to be a hell month of a lot of travel, but that's the way it is. Got back from a tech company's user conference this week. It was good. Small number of users, but super senior folks, a lot of CEOs, CFOs, chief operating officers talking about data. I tell you, it was great to be in a room with fellow data nerds, data geeks. It was great. And we actually did some research for them. A couple weeks when this gets published, I'm going to bring it up because there were some really interesting findings. But let's get into some of the more recent stuff here, Stacey. And I wanted to kind of bring up the topic that has become kind of a meme in the world, social media world at least, and maybe even more broader than that. Something called Workslop. I don't know if you've heard this term before, but it was I think it was a Stanford study that claims that Workslop, which is the definition being AI-generated content that looks polished but lacks real substance. The study says that it is leading to productivity losses, and they quantified this of about $186 per employee per month. And then on top of that, the people who produce this Workslop are viewed as being less creative, less capable, and less reliable. And I doubt it would surprise you or anybody else listening that I have some problems with this study. Now, on the good side, I agree that the observation that AI lowers the barrier to creating this passable but shallow content, that I think is spot on. In fact, I do believe that the Gen AI tools that are out there often produce text that looks good. You know, there's strong grammar, fluent, and all that, but it kind of lacks the analytical rigor and originality and accuracy that we really need. And I give them kudos for attempting to assign a dollar cost to this, because most studies just make these kinds of assertions and don't quantify it. But I have to say that a couple of things. First of all, I really think that while the study is attributing the output quality declines to AI, I think that's a bit of a stretch, because first of all, how much of work quality has declined in the last 5, 10, 15, even 20 years already. I think there's a lot of social changes that are going on, educational issues, the work, as we cut down on the number of people that work in various areas, it puts a lot of pressure on the remaining folks. So I wonder if they're over attributing this decline in quality to the AI tools. And I also think that defining Workslop is kind of tricky. You know, I don't know about you. I use ChatGPT and Claude and Perplexity a lot to create some first drafts of things, to stimulate some ideas. So where do you really draw the line between a rough draft of something or a brainstorming memo and the accusation that this is hollow and empty content? So I had some issues with it. You got thoughts on this whole topic of Workslop?
Yeah, I mean, obviously catchy title for sure when you think about Workslop. I have gotten Workslop off of some folks reaching out to me via LinkedIn, Ron, and saying, Stacey, love all the work that you do for Cornerstone Advisors. And then they just dove right into their pitch. And of course, I just, kept it moving, right? It didn't compel me, especially as a reader. And I'll say this very similar to you. I too use ChatGPT, Perplexity, Claude, and a couple of others others. And I use it more so, this is the draft. This is what I want to post. This is additional context. This is the tone in which I want to deliver it, right? I also can be a little snarky. So I also, there, depending on who's receiving the response, I'm like, reduce the snark a little bit. And I think that that's what we have to be mindful of, right? The tool, and to be able to kind of have that proofreader. And it's not being used that way. I was reading through your comments when you posted and you spoke about Workslop earlier this week. And there was someone by the name of Doug Bobenhouse, founder at Basefound AI. And he said it wonderfully. So I have to shout him out here. But he said, context is everything. Hello. So when people think AI is going to do their work for them outright and forget why they were hired in the first place, right? I have almost 20 years in the financial services industry, Ron, and he speaks to, the expertise that we gained in that time, then our network, knowing the Ron Shevlins, knowing everyone else, the processes, what's worked, what's actually worked, right? Putting pen to paper, boots on the ground. And I think that when folks are leveraging large language models, and even now, I mean, Sora, right? What you can do with videos, that's a whole nother conversation. Those prompts to maintain and to amplify creativity is the ultimate value proposition. So I think that for this specific article, that is the main call out. Let's not just use it as a robot and say, create this itinerary. What about the itinerary? What about the what we're trying to deliver, right? What do you think? What are your thoughts on there?
Well, a couple of things. First of all, I think from a management perspective or a manager's perspective, I think you've got to make some tough calls when you get some input from somebody or feedback or something written. You can look at this and, if you know somebody, you kind of know whether or not they really wrote this or not. It drives me nuts, and I know everything drives me nuts. But one of the things that drives me nuts is on LinkedIn is you can see these posts and it's so clear, not even from what they wrote, but from the structure of it, that they didn't write it. I know that people do not write in these terse, punchy bullet points. Right. They don't put all these emojis in there. And all of a sudden, something comes up, it isn't. But you've got to kind of, as a manager, call somebody out and sit them down and go, Stacey, I know this isn't you. This doesn't fly. So there's that, producing this stuff and sending it out, I think, is more than just the reputational effect. It has a huge ripple effect in the organization. But it's this idea of kind of cheating. What I do is I'll go to a chat GPT. Generally, that's where I generally go, more so than a Claude or a Perplexity. But I'll say, so I'm thinking this. Tell me why I'm wrong. And it'll come back and argue some stuff. And I'll go, yeah, I hadn't thought about that. And I will include that in and saying, well, I could be wrong. Here's some thoughts on it. And yeah, that's not original thought of why I thought I was wrong, but to me, it's worth including to say, hey, there is another side of the story here. And I have to say, I don't think anybody's ever accused me of Workslop yet, but hey, guess what? I do use these tools. So, there's a way to kind of do it, I think, productively. But I think as a manager, you got to be kind of attuned to this and stay on top of it with your folks.
I just think about, what did ghostwriters do before ChatGPT and what's up with them? That's all I'm thinking about now. But
next?
Yeah. All right. What's next? So, Ron, do you remember a few episodes ago, I spoke about this Brazilian bank, 12-year-old bank that's now the Latin America's largest digital bank, Nubank. Remember that?
Sure.
All right. Well, guess what? According to American Banker, I think it was just yesterday, right? So October 1st, October 2nd, Nubank has applied for a U.S. charter. Look at that. All right. So officially applied for U.S. national bank charter coverage territory with the OCC. And this basically falls in line with the bank's global expansion strategy. So their overall objective, as I was reading through the article, is serving both US based customers and the expats of Latin America. I know a lot of folks that used to live here now moved to Latin America and living a much more breezier, easier life, Ron. The US charter application includes Nubank's full suite of financial products. So you're speaking checking, deposit accounts, right? Credit cards, lending, digital asset custody. The bank currently serves over 123 million customers in Brazil, Mexico, and Colombia. Their focus is leveraging their cloud native, low cost, customer centric platform. And remember that these are the folks who have a whole department in enhancing the clicking experience down to a couple of clicks, right? So Nubank's U.S. board includes former Brazil Central Bank President Roberto Campos Neto, the chairman, and he's the same guy. We remarked this the last time we spoke about this, but this is the same guy who took Nubank's Pix Rails, right? Partnering with Matera to gamers when they were building the experience for maximize engagement. And the gamers, and I've been using this line for a whole bunch of strategic planning sessions that I've been facilitating since, but the gamers responded to Roberto saying that the best concepts for a financial mobile app needed to be cheap, fast, transparent, open, and secure. The founder and CEO, David Velez, expressed that Nubank remains focused on growth in their existing Latin American markets and designed a U.S. charter for their customers located within the U.S., and attracting new ones, of course, who may benefit from their digital first offering. So the bank's co-founder have a very HR compliant girl crush on like just such a boss of what she's doing. But Cristina Junqueira, she's relocated to the U.S. to spearhead this potentially approved charter. So this positions the company to compete directly with other challenger banks. And check this out, let alone community financial institutions by offering end-to-end products without relying on partner banks. So I have two words to this new news: Hunger Games. Hunger Games of the financial services. What do you think about that, Ron?
So I got a couple thoughts on this. And first, let's take a look back over the last 10 years or so. Nubank is hardly the first fintech or bank, foreign bank, to try to come into the U.S. And for the most part, those who have tried, and these mostly been European based fintechs who have come in, have failed miserably. And it was interesting a few years ago when one of them came in, Monzo came in, N26 came in. I had an opportunity to talk with the U.S. country manager. And they basically said, what's the big problem in the U.S. banking market that you're going to make right by coming in here? And he said, well, the mobile banking experience in the U.S. is horrible, and we have a much better experience. And I just remember thinking at the time, you're delusional, buddy. The digital banking experience in the U.S. is phenomenal when it comes to some of the financial institutions. And what's even more important is that this is all relative. Most Americans have no clue what the digital banking experience is in Europe or South America or in Asia, where it may very well be better. But if we don't know, then we don't know, and we're not going to change it. And everybody else who's come into the market has failed. So what's different about today? Well, a couple of things. First of all, like Nubank or like Revolut, who's also talking about getting a U.S. charter, we're talking about fintechs who are, for all intents and purposes, larger than 95% of the banks here in the U.S. already in terms of their scope and scale. So we're talking about fintechs or companies. I don't even want to call them fintechs anymore. They're banks.
Right.
They're financial institutions or financial services companies, and they have scope and scale. They can afford to come into the market. Varo in the U.S. was really the first fintech to go after a charter, and you could argue, if you want, and I would, that it hurt them. They should have relied on partner banks for longer to build a better base of customers. I think the money they had to spend to get this. Well, you've got Revolut and Nubank coming to the U.S. Who can afford to spend the money, spend the resources to do this. What's also different about now versus then, Stacey, is that I think the key part for me about Nubank, I couldn't care less if they had one or 100 gazillion customers in Brazil, everywhere else. It doesn't matter in the U.S. market. But what's different now is they say they're coming in with more of a digital assets play. And that's much more greenfield. That's a bigger opportunity here in the U.S. to get into that and leapfrog what some of the financial institutions are doing. Lastly, I want to comment on one other thing. There was a LinkedIn post recently from a guy named Kabir Kumar, who's a partner at Flourish Ventures, and he commented really more broad. He commented about the Nubank charter as well as some other things in particular. I thought it was a great post. but specifically around the Nubank application for an OCC charter, he said, simply putting in an application signals how far we've come in enabling financial innovation in the U.S., and also said the best consumer policy is one that makes room for innovators to deliver, because we need both parties to get behind that. So I had a couple of issues with some of his comments. I think we've really only come this far in terms of enabling these charters because of a change of administrations in Washington. I think if the elections in 2024 had been different, I don't think we would have seen a lot of these new charter applications, specifically from like Nubank and Revolut and things like that. And the second thing that I would push back on him on his comment is that the so-called financial innovation in the U.S. really isn't coming from the U.S. It's actually coming from outside the U.S. from firms like Revolut and Nubank. So, all right, I'll take a breath and stop for a second and let you kind of react to that.
No, I thank you for that. I'm here not like just nodding my head on a couple of things here. Yes, Nubank has something going on when it comes to their digital forward services, right? And what they're doing, we haven't even touched what they plan to do in digitization and more crypto, right? But I was just like, as you were mentioning, you compelled me to kind of research. Again, their focus in this bank charter is to basically provide these services even to the expats. So I pulled up on Perplexity really quick, like how many expats live in Latin America? And of course, it cited a whole bunch of sources. But according to Savvy Nomad, there's about maybe 300 and 304 million expats as of 2024. That's 3.6% of the world population. So that's a niche. We always speak about certain segmentations, right, Ron? So that's one thing that came to mind. And then I also think about what are the, if these are the Hunger Games now, what does the survival tips look like for I always vouch for community financial institutions, but sheesh, now for other challengers, like what does this look like now, I guess? And I have a few suggestions here. And then I have a quick question before we even dive into the survival tips, but just enlighten me. So they, as a new bank, submitted this U.S. bank charter at this application. How long does that usually take, like in your experience?
A couple of years.
Does it? Okay.
Now, it may be shorter with this policy, with the specific charter that they might be applying for might be an easier one to get. So I have to admit, I don't know the specifics of that one,
Okay.
but it can take a long time and take more importantly, just as importantly, I should say, a lot of money.
Yeah, just to kind of get that approved and go and fully launch. So I think that during this time, like, again, we just quoted right now what that expat number looks like. So when we think about some other folks that are entertaining this space, right, and who else can they target that are unserved or unbanked? Again, I think about let's not ignore the Latin American expats, right? Like Nubank's not just here for them. Like it's chasing whoever wants digital freedom. We speak about newer generations, right? Like I think I even take it there where they hate friction and they want their crypto wallet next to their mortgage, right? So we think about that. And I think it's also less about, will Nubank steal deposits and more, why are our customers changing banks in the middle of a TikTok live stream about a fintech? So that's where it takes me. And then having been a community banker myself, I think about even the branch experience and again, strategic planning season and thinking about how to drive engagement, what that looks like. But I even think about if your brand's legacy is still built on free coffee and Friday lobby donuts, get ready to pivot or perish. Right? If it's going to take them a couple of years, what can we learn from Nubank's play that some folks can start kind of maybe, honing in on and doubling down, right? And modernizing their tech stack, even if we even want to take it there.
Wait, there are banks that offer free coffee and donuts. How come I don't know about that? Wait, I'm sure.
Follow me for more.
Because my wife doesn't tell me. That's probably what it is. Because I'd go there and just eat. So I think what I hear you saying,
you'll eat and walk out.
Well, so what I hear you saying, it's not just Hunger Game. It's the younger Hunger Game, younger Hunger Games. Okay, I can't say that. I shouldn't have gone there.
You got it.
All right. Ready to go to the third topic
Let's
for the day? I
go.
think this will probably be the last one. I'm sure you pay attention to this just like I do and we do at Cornerstone and a lot of the folks who will be listening. But the past couple weeks has been an absolute explosion in acquisitions from some of the core providers. Let's see, we got FIS acquiring Amount. You had Jack Henry acquiring, I'm blanking out on the name. You know who I'm talking about. That came up. Fiserv announced two acquisitions, one from Stone Castle, the other was Smith Consulting. So let's talk about some of these. I know you wanted to comment on the FIS Amount. So tell us your thoughts on what's going on with that acquisition.
Yeah, so a little bit about FIS and amount, and please, by all means, add here. But just researching and just reading through it, what I highlight is like the strategic move, right? Designing to make FIS's banking software smarter, faster, flexible with embedded AI for, I think it was fraud reduction, compliance, and overall seamless customer experience. Sound very familiar to Nubank, right? So
Yeah.
I think my call out here is like over 150 million applications have run through the Amounts platform, and it covers again deposits, loans, and cards. And now FIS can offer these unified cloud native tools to its clients, helping them compete better in today's digital first financial environment. So they're getting something right here. Again, younger generation, digitally first, right? And this move overall helps FIS clients boost deposits, right? Again, boost their lending card portfolios, which keeps up with the whole digital transformation, those beautiful buzzwords, and the overall trends in the financial industry. So I think, if anything, congratulations to them for this acquisition. They know exactly what they're doing and where they need to double down in.
Agreed. Let's bring up another one. Wanted to talk a little bit about Fiserv's acquisition of Stone Castle.
Mm-hmm.
You know, on the face of it, to me, you could interpret it as just simply Fiserv is acquiring a deposit network to compete with the likes of IntraFi and Ampersand. And in fact, the article I saw on American Banker quoted Fiserv's chief operating officer as saying, acquiring Stone Castle sets Fiserv apart in core banking by enabling institutions to custody cash supporting Fiserv stablecoins. Having read that, though, I've got to say that my take was I couldn't help but wonder if this acquisition actually helps Fiserv's merchant clients more so than the financial institutions. I think it's really easy to imagine Fiserv using Stone Castle to offer a stablecoin sweep service or a stablecoin treasury hub for merchants and retailers. So that was one takeaway I had. And the other was maybe wondering if there was some sort of Finxact play here. Stone Castle already uses Finxact to run its digital assets business. And made me wonder, does Fiserv see this as a way to accelerate digital core conversions? Just some thoughts I had from hearing about this.
Yeah.
But overall, I think it is a good move on Fiserv. I give them kudos for this.
I agree with you, Ron. And I would also add, for me, the way I looked at this deal was, is it safe to say that this is giving war for deposit strategy? Right. You know, and this is the way I like to look at it. So think about it. Stone Castle is like someone with a big jar of coins, and they know just where to find more coins when needed. So Fiserv buying Stone Castle is making sure that all its bank and credit union friends can easily get coins from that big jar that's safe and quick. Right. It's a safe war for deposit strategy. What do you think there? Do you not look at it that way?
I'm looking at it more, not from the deposit acquisition perspective, but from the deposit management perspective. Right. And I'm thinking that, maybe Fiserv sees that Stone Castle is a good business. We know that there's an opportunity there. But I'm thinking, are they thinking, wait, this is going to help them drive their stablecoin opportunity? And the Finxact piece might be a bit of a stretch, but I think specifically it's around. But I think and this is where maybe they'll get mad at me for saying this, and I don't care if you get mad at me for saying this.
That's right. Tell them, Ron.
The FI angle doesn't seem to me to be like the real immediate opportunity. I think it's on the merchant side, the cash and treasury management opportunities, right. And you look at both FIS and Fiserv, and they have done a lot to refocus a lot of their efforts on the merchant business in the last couple of years. So that was my speculation.
Yeah, I think your What's Going On in Banking that you release every single year. Stay tuned for 2026. But your
Oh,
What's
do I
Going
have
on
to
in
do that again? Oh, come on. I'm getting
but
tired of that.
you listen, you've been calling it. You've been calling it on these on these white papers that a whole bunch of executives survey on, and more and more acquisitions. So it's not only banks, it's which of these fintechs can partner with some other folks to make the whole experience faster and secure. So you called it.
Yeah. Well, there's also the broader thing about the acquisition. So, Stacey, and you've been in this business a long time to see this, is typically the pattern is the big core waits till some segment of the business is mature enough and then they pick the right one. I think the pressure on them is now getting to the point where they've got to make some big bets on who the emerging players are and what these emerging services are. And while bankers are going to hate me for saying this, there is actually some benefit to that. If they are enabling the integration into the core and digital
Right.
applications and platforms, and providing some cash to ensure that there's the financial legitimacy and stability, because most banks do not want to go too risky. So there
Right.
are some benefits to this, but it is the big getting bigger here.
Yeah. All right. Well, I think we're done.
It's a wrap for this episode. Stacey, great to chat with you. Thank you, everybody, for joining us, and we hope to see you in another episode of What's Going On in Banking.
Thank you, Ron.
If you enjoyed today's What's Going On in Banking podcast, make sure to hit that follow button on Spotify, Apple Podcasts, YouTube, wherever you're listening. We've got more great conversations coming your way, and you won't want to miss them. Thanks for tuning in.